and this is the way I've been doing it ever since day one. It just seems to me, if I've got the money lined up first, there's always going to be deals. There's always going to be deals. But if I've got the money lined up first, just think how much more confident, how many more offers I'm going to make if I've got the money burning a hole in my pocket, ready to go and close fast. Like, that's one reason I get so many more offers accepted than my competition.
If you're a real estate investor and are wondering how to raise and leverage private money to make more profit on every deal, then you're in the right place. On Raising Private Money, we'll speak with new and seasoned investors to dissect their deals and extract the best tips and strategies to help you get the money, because the money comes first. Now here's your host, Jay Conner.
All right, welcome to the No Investor Podcast. I'm Dan Deppen, and today I'm joined by Jay Conner, the Private Money Authority. Jay, how you doing?
Hey, Dan, I'm doing fantastic, and thank you so much for inviting me to come along to talk about what I'm so passionate about. That's private money, because that's had more of an impact on our business than anything else we've done.
Yeah, I think that'll be a great topic for our audience, because I use a lot of private money in note investing. And one of the things I've talked about for a few years and included in courses is that raising private money is actually a lot more straightforward and probably less scary than people think. But I noticed something that people who haven't done it before tend to have like a lot of resistance to, or they just kind of assume it's really hard. So I'm glad you're here to kind of talk about how you go about it and some of the other concepts. And I'm looking forward to learning from you as well.
Absolutely. Well, you know what I love talking about on private money is how to raise private money without ever asking for money. You know, it's funny, Dan, I've been investing in real estate full time since 2003 here in Eastern North Carolina, but I've been raising private money for real estate deals since 2009. I got 47 private lenders right now. I've never asked for money. And so I'm looking forward to diving in deep with you. Exactly how do I go? And, you know, I've never pitched a deal. I've never pitched it. They say, Jay, how do you get all that private money? We got about $8.5 million in private money that we use from, you know, projects to projects. And so it's all about attracting and not chasing, begging, selling, or trying to persuade or talk anybody into anything.
No, that sounds great. So I guess we can, to begin. So like, where does somebody start if they've never done this before?
Sure. Well, a great place to start is it's hard to own real estate. It's hard to invest in notes until you own the real estate that's between your ears. So what in the world do I mean by that? So it's a big mindset shift. You see, when I started out in real estate, the only thing I knew to do is go to the local bank and get on my hands and knees and put my hands underneath my chin and beg and fill out applications, and they pull my credit score and they look up my skirt at my personal assets and they do a colonoscopy. I mean, you know, and they ask for your firstborn. That's all I know to do, right? Well, all that changed in January of 2009. I'd been in this business full time for 6 years, and I picked up my telephone here at the desk. I called my banker. I'd been doing business with him for 6 years. Told him about 2 deals I had under contract, and I learned like that, Dan, over the phone, that my line of credit had been shut down with no notice.
Oh, and this was 09. Yeah, that
09.
happened to my dad as well. Yeah, I think they were turning those off like crazy during that time.
Like the spigot turned off overnight.
Yeah.
So I said to my banker, I said, Steve, what do you mean? What are you talking about? You're closing my line of credit. We've got a great business relationship here for 6 years, never been late on a payment. He said, Jay, don't you know there's a global financial crisis going on right now? I said, no, but now you just gave me a global financial crisis. I don't have a way to fund these 2 deals that I've got under contract. So anyway, I hung up the phone. I asked myself a very important question. You know, the power's in the questions. And the question I asked myself was, Jay, who do you know that can help you with your problem? And by the way, these people running around saying every problem's an opportunity, I want to throw up. I didn't have an opportunity. I had a problem. I couldn't fund my 2 deals. Well, when I asked myself, who do I know, I immediately thought of a good friend, Jeff Blankenship, who lived in Greensboro, North Carolina at the time. And I called him up. I told him what had just happened. Jeff said, Jay, welcome to the club. I said, what club is that? He said, the club of having the bank shut you down. They shut me down last week. I said, okay. I said, how are you going to fund your deals? He said, well, have you ever heard of private money? I said, no. He said, have you ever heard of self-directed IRAs and how individuals can use retirement funds to be a private lender and loan money out to real estate investors? I said, no. So I knew Jeff had told me something. So I studied private money, and I established a relationship with a self-directed IRA company where I could refer potential private lenders to them that have current retirement funds not getting a high rate of return. So back to your question, how does somebody start? We want to get our mind straight on this. Again, we're not chasing or begging or selling. Instead of asking for money, this is all the mindset. Instead of asking for money, we are leading with a servant's heart, and we are doing what? We're putting on, just like I did, my private money teacher hat. So the mindset, I formed a mindset of being a teacher. Here's what's interesting. Those 47 private lenders that I've got, not one of them had ever heard of private money until I taught them about it. Not one of them had ever heard of self-directed IRAs until I taught them about it. Now, another big distinction is separating the conversation between your program and what you're offering and how people can make high rates of return safely and securely. So back to your question, where do you start? Along with your mindset, what you got to start with is, what are you offering? What's your program? And for me, it's the same program with every one of my private lenders. I pay the same interest rate. I protect them the same way because I don't borrow unsecured funds. The length of the notes are the same. And so what's the program that you're going to teach to people and that you're going to share? And so then once I've taught the program, I don't have to ask them if they want to sign up or they want to enroll as a private lender. They're going to tell me, right? They're going to tell me if they want to or not. And so another part of the secret sauce, the magic, is when I've got a deal for them to fund, or in your case, Dan, you got a note for that you're looking to be funded, or if I've got a single family house to be funded, or if I'm raising money, for something else. I have what's called the good news phone call. The good news phone call. So, Dan, let's say you're one of my new private lenders, and let's say you've got $150,000 that you want to loan out and invest. And let's just say that, for example, let's say it was retirement funds. Let's say it's not liquid capital. Let's say it's retirement funds, and let's say it's a 401k you had laying around and you're not happy with the returns. Well, I introduced you to a self-directed IRA company. You moved your funds over, tax-free or no tax event is triggered by that. So now your money is sitting there waiting for me to put your money to work, because the way it works, I tell my new private lenders, I'm going to put your money to work for you just as soon as possible. So here's the good news phone script. This is all an example of what I'm going over right now as to having your mindset straight of no begging, no selling, no chasing, no persuading. You're serving. So I already served by teaching the program, right? How I'm going to protect you. Now, here's the good news phone script. So the phone rings. I call up Dan, my new private lender. I say, Dan, I've got great news for you. I can now put your money to work. I've got a single family house in Newport with an after repaired value of $200,000. The funding required is $150,000. So this deal matches up to the funding that you have available. Closing is going to be next Tuesday. So you need to have your funds wired to my real estate attorney's trust account, because they're going to do the closing. By next Monday, I'm going to have my attorney wire you the closing instructions. End of conversation. Notice I did not ask Dan, do you want to fund the deal? Of course you want to fund the deal. You've been waiting for the phone call, and I'm not bringing a deal for you to fund unless it matches the criteria of the program that I already taught you. And then in addition to that, if Dan has moved his $150,000 from this retirement account over here to the self-directed IRA company that I recommended, he's done that at my recommendation, and he's not making any money until I do put his money to work. So that mindset of being a teacher, new real estate investors ask me all the time, Dan, they'll say, well, how do I get over the fear of rejection? Well, let me answer that question with a question. How can you be afraid of rejection if you're not asking anybody for anything?
Right.
You're sharing, you're teaching, you're sharing an opportunity in a program with no deal attached to it. The worst time in the world to be raising money for real estate is when you need it for a deal.
Mm-hmm.
That's the worst time.
Who
wants that pressure?
Yeah. So basically you're lining up all the funding ahead of time, then going out and finding deals.
Absolutely. Now, Dan, I'm getting ready to risk. I'm getting ready to take a risk right now. I'm getting ready to share a quote that I know you have heard from stage of educators in real estate say, and it drives me crazy. It makes me want to go run into a wall. And here it is. They'll say to new real estate investors from the stage, oh, just get the deal under contract. The money is showing up.
So a guy that I originally learned notes from, who I don't recommend, that was kind of his attitude, was you go out and find the deal, then you'll figure it out after that. And especially in the note space, that happens all the time. And what people do is they get the deal and then they end up not being able to fund it. And then they scorch their relationship with the seller. And then it makes it that much harder the next time.
Yeah. It's like, and this is the way I've been doing it ever since day one. It just seems to me, if I've got the money lined up first, there's always going to be deals. There's always going to be deals. But if I've got the money lined up first, just think how much more confident, how many more offers I'm going to make if I've got the money burning a hole in my pocket, ready to go and close fast. That's one reason I get so many more offers accepted than my competition. Look, I just bought an oceanfront condominium a few weeks ago. Oceanfront, third story here at Atlantic Beach, North Carolina. $425,000 is what I paid for it. The renovation, interior paint, and a little bit of sheetrock repair was only $10,000. So I had $435,000 in it. I put it on the market and it was gone. I had multiple offers. I sold it for $628,000. Here's the point of the story, though. The seller had to close from the time they contacted us, one of our Google ads, had to close in 5 days because it was going to the courthouse as a foreclosure sale.
Oh, yeah.
And if I hadn't had the money already lined up, ready to go, ready to close, I would have missed out on that deal.
Mm-hmm.
Time kills deals.
Absolutely.
And you can't make money in slow motion.
Well, and for the seller in that case too, right? If they let it go to the foreclosure auction, they may still get some money, but it's not going to sell for as much as if they can sell it on their own.
Mm-hmm. Exactly. So those are some really important reasons right there as to why it's so important, in my opinion, in my experience, to get the money lined up first. Know your program, put on your teacher hat, be a servant. And, one question I get all the time, Dan, is, well, how do you get the word out? How do you start sharing this information? Well, there's a number of ways. Obviously you can have, one-on-one visits, go to lunch with people, have coffee. But I like to leverage my time, right? So when I was cut off from the banks way back in 2009, I put my program together like I'm talking about, and it's generic. It goes for no matter what the deal is. And so then I just invited about 20 people to a luncheon, and had my CPA and my realtor and my real estate attorney there. And I had 20 people just in my own network, right? Just in my own network, invited. I bought them lunch. And then I did a 20-minute presentation on what is private money, what's a private lender, how you can use retirement funds to do this and be totally passive. And so I just taught the program. And, I had a sheet with a level of interest, that I handed out I raised $969,000 from that one private lender event.
Yeah, I raised some of my first private money there used to be a local notes meetup that we had here in Denver. And it was just from showing up there and talking about what I did. And then I did give a couple presentations at one point, but it's very similar to what you're talking about. Then a lot of times, some of those first people asked me if I had any deals or anything going on. So it was very much like pull versus push. I've never tried to sell anyone on doing something with me.
Exactly. And I'll tell you another place where I got the word out very, very quickly. And I got a lot of private money. And that was Business Networking International, also known as BNI. Well, that's an international group founded by Ivan Meisner. And the purpose of that group is to give your fellow members in your local area leads for business. So we met every week, 7:30 in the morning. And so I had, 23, 24 other people spreading the word for me about how I'm paying high rates of return safely and securely for people that want to be totally passively involved in real estate. So they'd refer me people. They'd refer people that have cash sitting on the sidelines, refer me people that, were retired and not happy with their retirement funds. So then I could teach about self-directed IRAs. So it's all about leveraging your time and not, running around with your hair on fire.
Yeah, maybe you could talk about self-directed IRAs a little bit. Is there anybody in particular that you recommend or IRA custodians you typically work with?
Sure, absolutely. So as a matter of fact, I just got his new contact information, but I've known this gentleman for a very, very long time. His name is Nate Hare, Hare, and he has been in the self-directed IRA space for many, many, many years. And the company that he represents is called directedira.com. So that's www.directed, D-I-R-E-C-T-E-D, directedira.com. And just go to that website. In fact, you can go to directedira.com/appointment, and you can book a call with Nate himself. But he's all about customer service and et cetera. And just in case somebody's listening to this show and you don't know what a self-directed IRA company is, here's what it is in a nutshell. A self-directed IRA company is a company that has been approved by the IRS to be what's called a third-party custodian. Over 99% of the people, public walking around, never heard of it. Financial advisors haven't heard of it because there's no commissions in it for the financial advisors. So what a self-directed IRA company does and what the IRS allows you to do is take current retirement funds, or you can open up a new account for $100. But if you want to get going fast, you can take current funds that you might have dedicated as retirement funds in the stock market, mutual funds. That would be with either, Schwab, Vanguard, et cetera. Or it may be a 401k from a previous employer. Well, the IRS allows you to move those funds, no tax effect, over to the self-directed IRA company, and it takes your account maybe a couple of weeks to get funded. Once your account is funded, now you can truly, here's why it's called that, you can now truly self-direct, right?
Mm-hmm.
The stock brokerages, they'll say, hey, you can self-direct. Well, you can choose which mutual fund.
Yeah, you can choose from a menu, and it's a relatively small menu typically, especially employer plans. Yeah,
exactly. But that's not this world. I mean, you can use your self-directed IRA account to go invest in a house and flip it, or invest in notes and flip the note or hold the notes or whatever. But all the profits and the returns go back into your IRA account at the self-directed IRA. But they're all coming back in. You're earning money either tax deferred or tax free depending on the type of retirement account you've got. I mean, where else can you go earn tax-free money, or at least tax-deferred money until you retire, like this?
Yeah, the other thing I always tell people too is sometimes people like assume if they're going to roll money over from another retirement account into self-directed, they got to roll the whole thing. But you don't. Like if you can just roll a small amount to do one deal and get started. In fact, I recommend not rolling the whole thing unless you're ready to go and deploy it so it's not sitting in cash.
Exactly. Well, if it's just sitting there, it's not going to earn any money.
Yeah, exactly. So now you will have some fees and things like that as well with the IRAs, but it is provide a lot of flexibility in what you can invest in. In fact, you can even do, I've only done notes in mine, but I believe can't you even do like businesses and other sorts of things?
Oh yeah. It's actually easier to list what you can't do
Yeah.
versus what you can do. I mean, shoot, you got people with retirement funds and self-directed IRAs that are actually investing in horse sperm. Can you believe? Right?
I've not heard of that one. No, I've not heard of that.
But I mean, you can't invest using your retirement funds. You can't invest in liquor, alcohol. You can't invest in antiques such as Oriental rugs, but you can invest in real estate. You can invest in notes. Interestingly enough, over 70% of people that have an account at a self-directed IRA company want to loan you, the real estate investor or note investor, money. Over 70% of them. They like the space. They just want to be passive and let somebody else oversee the deals.
Yeah, and I forget what the numbers are, but there's a hellacious amount of cash sitting in self-directed accounts. It's like
a lot of
hundreds and hundreds of millions of dollars.
Yes. Hey, look, my experience, there's more money available than there are deals.
Yeah, that's been my experience as well. And a lot of times people are surprised when I tell them that, but at least in my business, finding the right deal at the right price is more challenging typically than finding the money.
Absolutely.
To fund the deal.
I mean, after starting to do business with private lenders, then they start referring other people. Another way I get it without asking. Now I got other people chasing me, wanting to give me money. And I've got quite a few private lenders I've never met. I don't even know what they look like. Talk to them over the phone quite a bit. But, when you have a private lender refer you another potential private lender, then what happens is this thing called the trust bridge. The trust bridge. Like that referred new private lender, never heard of Jay Connor, don't know who Jay Connor is, but the person that referred them has been doing business with me for years. And so now the trust that current private lender has in me now transfers to the new person that's referred.
Well, that brings up another question I had. So for you as the operator, how do you go about screening your funding partners and making sure that they understand the deal and that you're involved with the right folks?
Yeah. Well, when they're referred to me, they already know the program. I mean, the person doing the referring has already told them the interest rate that I'm paying, how they're protected, how I'm not borrowing unsecured funds, conservative loan to values, et cetera. So they already know the program. So when they're referred to me, then I review that program with them again to make sure that they do understand the program. And then they simply give me a verbal pledge as to how much they've got to work with. They always have more than they tell you.
Oh, really? Yeah.
They always have more than they tell you initially. And so they want to get started. And so I'll tell them I'll put their money to work for them as soon as possible. If they've got retirement funds, I'll go ahead and introduce them to my representatives, such as Nate Hare, to get their account funded if they're using retirement funds. I've got private lenders that are using just liquid investment capital and their retirement funds. I got some private lenders that are just using liquid capital. Some are using just their retirement funds. So, all the above. So in answer to your question, I just simply review with them what they've already been told by the current private lender, and they tell me what they've got, and then I put their money to work just as soon as possible.
Oh, that's very, very cool. So once someone gets started on this, like what are some tips for people who want to begin to scale things up? So I know for most folks, usually they start to notice they're deploying their own money, and then, you know, that's always limited no matter who you are. And then they might start using outside funding to keep growing. What's a good way for people to manage once you get to, like you said, you have 50 some investors? Like doing one investor is one thing. How do you manage that once you start going to like 5, 10 and
Sure.
more?
Well, I mean, we have a very, very sophisticated system. They're all on a spreadsheet by property,
Mm-hmm.
by property. So we got two spreadsheets. We got a spreadsheet with our properties and what private lender or private lenders have loaned money secured by that real estate. And then we have another spreadsheet, which is called the queue. So when I have a new private lender come on board, they go to the top of the queue. They get the next deal, depending on if they've got the right amount of money. So they get the next deal because I want to prove to them that we can perform. Now, when we pay off a private lender because we cashed out on the deal, then they will go to the bottom of the queue and work their way back up. Now, one thing that we do as well to keep the money used is in real estate with single family houses, we'll do a lot of substitutions of collateral. So what in the world is a substitution of collateral? Well, the private lender's got a promissory note that's secured by a property. Well, if that property is sold, it's no longer there to secure that note because we had to clear out the lien when we sold it. So now, if I have another property that I'm getting ready to renovate or another property to purchase, then we will substitute the new property, and now a new property or another property will secure that promissory note that's already in place so they can keep their note open and keep earning money.
Gotcha. And then what happens if for some reason the investor says, I don't want it to be secured by the new property? You just cash them out at that point and then get funding from.
Well, that's an interesting question. When you substitute the property, they have to sign in front of a notary. And I've got private lenders all over 10 different states. They have to sign in front of a notary. It's a loan modification is what it is. So they have to sign the loan modification and agree to that substitution of collateral. Interestingly enough, Dan, in all these years since 2009, I've never had a private lender not want to keep their note in play and open. Now, this is assuming the term has not come due.
Right.
This is assuming the term is not expired. But if they want their money back, what are they going to do with it? In other words, where are they going to earn these kinds of rates of return? I pay 8%. I've been paying 8%, no origination fees, ever since 2009. So the fact of the matter is they don't want the money back. In fact, when I have a new private lender and I'm getting ready to pay them off and cash out, invariably they'll say, Jay, can't you just keep the money? Well, the answer is no. I'm not going to keep your money unless I can secure it safely and securely in a conservative way, buy a property.
No, that makes sense. So what are some ways that people can get a hold of you if they want to learn more?
Sure. Well, Dan, I'm so excited. I just finished my brand new 7-day private money challenge. Well, what in the world is the 7-day private money challenge? This is a series of 7 videos, and each video is only 15 to 20 minutes in length, very easy to understand. And I cover all the foundation, all the basics of private money. And it's very simple. You can enroll by simply going to www.privatemoneychallenge.com. www.privatemoneychallenge.com. You can enroll right there. And when you enroll, you will immediately receive in your email inbox the first video of 7. And then the next morning, for the next 6 mornings at 9 a.m. Eastern Time, you'll receive each subsequent video training. That's me right there. And 2 things about it. You're going to learn how to raise private money. Even if you've been raising private money, you'll learn how to raise more of it more easily. And I promise you, you're going to have a lot of fun, because if I'm not having fun, I'm not doing it. In addition to that, I'm now beginning my 8th year of my podcast, so you can follow me on my podcast and imagine what the name of my podcast is. Raising Private Money with Jay Conner. So I'm on all the platforms, iTunes, Spotify, whatever your favorite podcast platform is. Just go search for Raising Private Money, and you'll see it pop up, Raising Private Money with Jay Conner. I have 2 shows a week, and I always have amazing guests that I interview. And what do I interview them about? I interview them about how they have gone out and raised private money. So we all learn from each other about how our different methods work and how we get all the money we need for our deals.
That's perfect. And I'll put the links to both of those, the podcast and the private money channel, in the notes, so it's easy for people to just click on it. So Jay, thanks so much for joining. I really appreciate it.
Dan, thank you so much for having me, and God bless you.
All right, too. Thanks.
Are you feeling inspired by the knowledge you gained in this episode? Then head over to jconner.com/moneyguide. That's jconner.com/moneyguide and download your free guide that shares 7 reasons why private money will skyrocket your real estate investing business right now. Again, that's jconner.com/moneyguide to get your free guide. We'll see you next time on Raising Private Money with Jay Conner.